Now for a quick disclaimer. Nothing you see or hear on the flight deck is investment advice. Nothing said today is intended as investment advice. Those participating in today's discussion may have bought, held and/or sold the stocks discussed today prior to today's discussion and/or may do so afterwards. Remember, you are responsible for your own investment decisions, and if in doubt, you should seek advice from an independent financial advisor. Stocks can be high risk, and you may lose the entire amount you have invested. Please now sit back and enjoy the flight.
Okay, hi, and welcome back to the Flight Deck. It's the 26th of November, and today I'm joined for a roundtable discussion. So we're going to do some intros. Quick introduction, we've got Alaska Geophys again joining us.
Hi, Flight. This is Alaska Geophys. I call myself Alaska because I live in Alaska since 1993, and Geophys because I'm a geophysicist. I've worked over 30 years in the oil and gas industry, with over 20 up in Alaska. I've worked with BP 31 years, both in technical and commercial roles. And then I joined Great Bear Petroleum in 2014 to be their exploration manager and worked there till the end of 2015. And we drilled the Alkaid well and planned the Talitha well.
Oh, really good to have you. We've also got Robito joining us tonight.
Hi folks, I'm Robito79, probably a medium-term Pantheon shareholder, been in the company now for about 7 years. My professional background is I've worked for about 20 years in the oil industry, mainly in the production chemistry space for an oil services company. So my experience has largely been in the Eastern Hemisphere, both in UK, Scandinavia, also the Middle East and more recently the Caspian as well.
Great stuff. And we have Sporazine on the line.
Hi Flight, hi everybody, Sporazine here. I've been a shareholder in Pantheon for about 8 years, so been through quite a few ups and downs over that time period. I actually work in the software industry, but I've been managing my own portfolio for a good few years now, mainly in sort of oil and gas names, natural resources, and of course technology.
Good. Oh, welcome, good to have you. Right, so just Unbelievable Jeff has joined us.
Thank you, Flight. Yeah, Jeff here. My background, I've been in the investment banking and private equity businesses for, I guess, over 30 years now, and got involved in Pantheon in 2011 when it was then a private company, Great Bear Petroleum. And I was involved for a period of 6 or 7 years in the various private financings for Great Bear. And in the end of 2018, beginning of 2019, Great Bear merged into the then Pantheon Resources PLC. And as you well know, the company pivoted away from its Texas operation to develop the assets that we had in Alaska. So post-listing, I've been involved again with my investment company with a number of other fellow investors, supporting each of the financing rounds. And primarily as a venture capitalist, my commitment to Pantheon is to really see the project through. The original meetings that we had with the company back in 2011 were very analog in nature, looking at the old U.S. geological surveys and the locations and identities of the now Harpoon and Kodiak fields. And my commitment is really to do what I can to support the company and its board to get the company into production and to fulfill the dream of Bob Rosenthal and Mario Traviati, their initial vision for the company.
The dream, going for the dream, I like it. Really exciting to have you.
Okay, welcome. So this is the first one, and we're going to get straight into it. A question to Alaska Geophys. So the Megrez bit's turning. It kicked off, I think it spudded on the 11th of November. How far do you think we are? How deep do you think we are currently?
Again, I have no inside information, but I've drilled these type of wells before. So we know they've set the surface casing down to 3,500 foot, drilled it vertically. They would have done a bottom hole pressure test. They would have done a leak-off test, which allows them to determine the mud weight they can go up to for the next hole size. They would have then drilled to about 7,400 feet, 7,500 foot, and look for a drilling break. A drilling break is when the bit goes slow through shale, but when it hits the reservoir sandstone they're predicting in the top set number 1, the bit would speed up. So they would look for that. They also have a gamma ray or some other electric logging tool close to the bit, and these signals are sent up by mud pulses. So they would have looked at the gamma ray again going from a sand to a shale, shale to a sand. And at that point, if they think they've got something, they pull the bit up a little bit, they circulate bottoms up, which means that basically cuttings and the oil that might be entrained in the mud rise to the surface. They see a good show. They then decide to pull the bit up. They trip out. They put on a drilling bit for coring. Basically, it's a circular bit that has a hollow inside opening. So when they drill, it leaves about a 4-inch, and they drill either 30-foot or 60-foot sections, maybe 90-foot if they want to. And they would go down, drill it. It'll take, a slower drill rate than typical. Once they have their 30 or 60 foot, they then pull that out. It's trapped within the core barrel. They take it to surface. They unload it, basically preserve it, and pack it up for shipping to the labs. So I'm pretty sure we probably should have gone through the first coring point, possibly even into the second coring point, depending on where that's at. And then they'll continue on to TD. So I think things are going well. Again, weather has not been the most perfect up there, but it is what it is.
I think they said originally it was like a 30-day drill, Geo-FIS. Is that how you're seeing it to get to TD, or maybe perhaps a little bit longer?
Yeah, that's about right. They actually could do it a little less time, but again, they probably were conservative in their permit application. They just kind of rounded it up to a month, and that takes into account some trouble time they might have. So again, plus or minus a month, and that also involves setting casing in the success case. So again, that'll take a number of days, plus the final logging that they do with wireline. So, we're looking at sometime early December for probably TD.
Right, and I think on the most recent video that they put out, which was the tour around the camp that Jay Cheatham primarily was doing that video, they said a technical update sometime in December. Look, I think December it's going to be probably quite a busy time because we're expecting the December board meeting for the AGDC, which is obviously the gas line group are planning their board meeting, and there's been quite a huge amount of momentum, I would say, around the news since Trump got elected. And so I think what will be, a dream scenario, I think, would be to have Pantheon hit TD and find what's predicted at Megrez, and then we get the AGDC board meeting a little bit after that with some material and news on feed, some progress on feed for AGDC. Would be a great way to head into Christmas.
Geo-FIS, can I ask, a typical non-technical person's question about the drill? And my understanding may be incorrect, but I thought we're going to intersect 3 different zones. And if you're drilling into 3 zones, is there a scenario where you get to one of the zones and that zone is very, very interesting, very prospective, and you just decide to spend your time there because that's the zone that you're probably going to end up being more likely to drill a flow test from? Or would you go to all 3 zones? Are those types of decisions that you need to make?
In fact, I thought about doing a post exactly on that subject because as you lay it out, it really depends on the people in the leadership role. What do they want to do? What's the well condition? Is a well falling apart? Is it, drilling good and looks like the rocks got to hold together for a fair amount of time? But in the case of the first sand topset number 1 coming in really good, you may say, well, I've got a barn burner here. I just want to get it behind pipe, make sure, I don't drill too deep and the hole falls apart and I can't actually case it off. So that is a possibility, although I think, again, the team wants to go as deep as they can. They're actually looking at topsets 1, 3, and 9. So again, 1 being shallow, 9 being deep. So they're going to have to go down and drill it until they feel like, again, they were either having some drilling issues or they've got, such a great amount of sand with known hydrocarbon pay that they just want to, again, just call it a day. They can always then come back, raise some more funds one way or the other, and then just do a second well, perhaps, and get some more appraisal information. But really good question.
Can I just build on that and ask, so once we got to TD, I assume the log and well drilling, as you point out, will have indicated, if the reservoirs are there or not. What risks remain at that point? I mean, obviously we got to flow test it, but I guess then they would have an understanding of porosity and permeability from the log and well drilling. So I'm just interested at how the risk reduces as you go through the different testing.
Another interesting question. First of all, they're going to hopefully do some of the coring, and again they'll get like a 60-foot view of the sand, assuming they pick it at the right spot. You really don't want to do a core, then find out, well, the sand you thought was going to be thick is only 10 foot thick, and you drill 50 foot of shale. It's going to be not real too productive with your time. But what they're going to find is, hydrocarbons in some sands. They may find water or just gas, perhaps something else than they're expecting in another sand. So they're going to have to revise their geologic model to understand what the trap really looks like. Is it a series? Each sand is its own unique trap, or is there one giant trap here where each sand is being filled by the hydrocarbon source from beneath it? And then eventually, if you drill on the side of the structure, you may find water in some of the sands, or if you drill in the center of the trap, you might find water, but you also might find gas at the top if there is gas that's broken out. So again, it's going to be a geologic detective story to figure out with one penetration, what is it really telling you about this whole area, which is usually why they drill multiple appraisal wells to actually get to the final truth.
I guess another question that I have, Jeff has, is, and I think this is something that the market is really very, very focused on. If we zoom out and look at the stock market and the stock market's expectations around Megrez, part of that is everybody's individual risk management position as it relates to Megrez. And I guess one question that I have is, if you look at this well, knowing what you know and knowing what we know from previous wells that we've drilled, can we put some probabilities or possibilities around the things that might go wrong and highlight what might go wrong? What would be your main concerns, both from a technical drilling standpoint, so from a mechanical standpoint, from an operations and execution standpoint, but also in terms of what we might find down there that is unexpected and not predicted in the seismic and all of the other work that we've done?
Okay, you cut out a little bit there, but I think I know what you're asking. So as they drill down, they're going to, again, be watching the well bore for stability. That's going to tell them, again, how long they can really work on this well and continue gathering data. But they're also going to find, as they drill through it with the LWD and possibly later with some electric logging tools, is this got good porosity, good permeability? Does it look like it's oil with the same gas-oil ratio that they've projected in the 3.3 TCF of gas? Is it got, perhaps heavier oil? Again, that's always a possibility as you go shallower. Again, because it's a trap that has a bit more structural focus, perhaps it's got gas at the top, oil, and then water at the bottom. They'll also then look at this from a development standpoint. If it's got the porosities and permeabilities, like 20 to 25% porosity, 5 to maybe 30 millidarcy perm, they can definitely get secondary recovery out of it, and probably even tertiary recovery. So instead of getting the Theta West and Talitha, 5 to 15% type recovery factors from primary pressure depletion, gas depletion, they're going to be looking at things in the range of 20% recoveries to maybe 40% recoveries, and also give them a place to put some of their NGLs. If they strip them out rather than just selling them, they can put it into this oil and use it to do enhanced oil recovery, which is what they do at the Cuppa field and the Prudhoe fields up to the north. So again, they're going to have a whole wealth of information that's going to come out of this well for reservoir engineering and development planning.
So what would be, if you were to list out the things that most concern you, what would they be? Again, both from a unexpected geological perspective and from a technical engineering perspective. What would your three biggest risk factors be? And how likely or unlikely do you think that they might?
Well, I think the first one is obviously the trap, which is also associated with the seal. If all the sands, at least the first ones they encounter, are wet, when the AVO amplitude versus offset by E-size predicts them to be hydrocarbon bearing, that would be a big red flag. Perhaps they just drilled in the wrong spot and they needed to drill farther east or farther west. But that would be a flag. The second one is reservoir quality. Again, we're thinking it's going to be better reservoir. And again, they'll know that pretty quickly looking at porosity density tools run through the reservoir and also the core as it comes up the surface. But again, I think, again, with everything we know, again, those should be pretty low risk that it's going to be as tight as it was perhaps Alkaid or Theta West or Talitha. The third one is, again, hydrocarbon charge. Is it going to be sort of a light oil, or is it going to be heavy oil, or is it going to be too gassy? And that's one you really don't know till you get there. Again, I think Pantheon actually thinks it's going to be a little higher GOR than I would have thought. But again, we won't know till we get some tests, from a short-term or a long-term production test.
Thanks.
That's really interesting, Alaska. I guess one question, the market is obviously focused on flow rates. They always focus on flow rates. But from the way you're speaking, I wonder, is most of the risk reduced after the initial kind of touchdown and numbers come out? And yes, it's all great to see a flow rate, but what information, I guess, is left for the flow test that we didn't see at touchdown?
Thanks for that question. As I've worked a lot of the fields up in the north, Prudhoe, Capark, and things like that, when you drill through a sand that actually has good permeability, you look at the resistivity, although this will be a mud-based drilling fluid, so it's a little different. But as you look at the rock, you'll know pretty quickly whether you've got something that's worth, 1,000 barrels per day, 2,000, 3,000 or more barrels per day flow rate. Again, just even looking at the cuttings, you'll know that the rock has good porosity. So again, I think a flow test is important, but probably not as important as it is for some of the tighter rock that we're trying to develop. And my view is, again, if we get what we think we're going to get, we're going to have some pretty high well rates.
I think the market's going to wait for the flow test, though, right? I mean, that's
Absolutely.
what's probably been holding us back up until this point.
But there are a lot of good analogs in the slope. The Willow and the Pika developments. You can look at their logs, the depth that they drilled those to, the oil quality they got out, and you can see what rates they got. So again, I think that's a good model to say, if we've got logs that look similar to that, we can probably expect some of the well rates to be like theirs.
That kind of touches on my point, Sporazine, that, I think the market will wait for flow rates as well, given recent history, obviously, with Alk2, etc. If we go, we've got a expert here, and most of the information will be known before that point, so we could be in a strange situation where we think we've got an excellent well and reservoir, and due to whatever flow test issues we don't get a good flow test, or we lose the well or something. So it'd be an
the other thing the flow test could do is you have a small hole size, and you basically run through a sand, and the sand's there. You can tie it to the 3D, which kind of extends the limit of where you think that sand's going. But the pressure test and the flow rates tells you a little bit about the container size. Is it the sand only goes, 600 foot, and then pressure seems to fall off there because it's actually not continuous sand? Or does it look like this is a big reservoir, which is actually much bigger than you would have thought? And then the last one is, does the sand have some high permeable streaks within it, which means that water flooding or gas flooding is going to be less efficient than if it's a nice, continuous, homogeneous sand. So there's all types of little things you're going to pick up that give you clues to what you can do with it.
Can I just ask a more simple question? You touched on, because Megrez is conventional in nature, the porosities and permeabilities are an order of magnitude against what we've seen, and people want to jump back to the previous videos. We've previously talked about that. But the point is, if they're hydrocarbon charged and conventional, then all of Pantheon's previous modelling is done on a recovery factor of 10%. But we're talking here about recovery factors 20, 30, 40%.
Yes, I don't know if Megrez actually listed the original oil in place in their various presentations. I haven't seen it, but they have seemed to have talked about some recovery factors somewhere. But it's the oil in place that really is the driving factor, what you're going to do with it. And, you can apply different recovery factors to get to your 609 million barrels of liquids or sellable liquids. Going to be interesting to find out exactly what the sand quality is like, because, again, that's going to dictate, can you do these secondary and tertiary type recoveries. And once you get up there, you really start going to large volumes. And if you could do the same thing with Alkaid and Theta West and stuff, you could increase those recovery factors too. It's just it's a little bit order of magnitude harder to do that. You could do things like huff and puff, where you take your excess gas, you produce the well for a while, and then you put that gas back into the reservoir to build the pressure back up at Alkaid, and you, with some of the light propane and ethane and other components in the gas, you basically swell the oil. It then pushes a little bit more out the second time, and you just do a rinse and repeat till you get to kind of a reduced abilities to get any more oil out of that. But that could drive the recovery factor up a few percent to maybe 5%, which again is pretty sizable numbers when you're talking about all the oil down there.
Yeah, I don't think they've released recovery rates for the 600 figure, but I know when they first released the lease update late last year, that it was kind of a high teens recovery rate associated with the Eastern Appoon leases then. But as I say, I don't know if that's transferable to the 609 million barrels we're talking at the moment.
And the other kind of development challenge is that A large part of this accumulation is underneath the Sag River. And if you go farther enough east, it's underneath what they call the Franklin's Bluff, which is a little area of structural high on the east side of the river. So again, it's going to be a lot of deviated well drilling, or again, you gut up and you put another pad on the east side of the river, but that's got its own challenges. Typically, if this field was somewhere else on the north slope, you might even be able to drill it with just slant wells and vertical wells and just do a water flood or a gravity drainage type development. But again, this is going to be a lot of horizontal drilling. You probably want to do, deviated horizontal wells, some with fracs, maybe some without fracs, depending on the quality of the rock. So it's going to be a real drilling exercise to how to get this out in the most efficient way, especially if there's stacked sands going from, say, 6,500 foot true vertical depth down to maybe 7,800 foot true vertical depths. You've got a vertical thickness to work with, as well as a big aerial area underneath the Sag River to play with.
I was going to just ask my understanding of the trap structure. I think previously you'd mentioned on looking at 3D seismic, there's a three-way closure. But if we're talking about separation of hydrocarbons in the reservoir, then are we looking at a scenario where you'd actually have an oil-water contact point, and so you could estimate the fill-to-spill point across a real extent? How far will this... My question is, to what extent can they appraise these anomalies with this one well?
Pressures tell you a lot. Back in Reddit days, I wrote an article about height above oil water contact and how you use pressures to predict column height. So if you took hydrostatic pressure gradient like 0.4334 psi per foot, and you extend that down from the surface, because you're probably drilling normal pressures out here. If you were to get an abnormal pressure in one of the sands you tested with hydrocarbons, you could plot that with the gravity of that particular oil and project it down to where you think the hydrostatic water gradient is, and where they intersect, that would be your plotted oil-water contact. So again, if you get relatively high pressure in the reservoir in a normally pressured area, that's going to tell you that probably that oil-water contact extends a fair distance down below it. If it's very close to the hydrostatic pressure gradient, the oil pressure, you basically know that perhaps there's a smaller oil distance between the oil-water contact and that particular sand. So you're going to get a lot of useful information. They have a tool called the MDT, or Modular Dynamic Tester, where they put a little probe up against the sand and they take a pressure and fluid sample, and that gives them some pretty good data. As long as the rock's got pretty good quality, that tool would be very useless in Alkaid or Theta West. You can't pump long enough to get a good sample test down there. But all those things are going to give you, again, a big puzzle about what's going on, where are the fluid contacts. You would expect oil water contacts in these sands unless they're completely filled to spill. And you just never test the oil water contact. Probably too much technical stuff for you guys.
In-flight announcement. Flight's investment server, sharing industry insights for the good of all. If you'd like to be part of our investor community, and for more information about the topics discussed today, download the Discord app to your phone or computer, then use the invitation link to join, which you can find below.
Well, maybe moving a little bit from the technical to the market again, and just sort of let's just circle back to what Roberto was saying, and I think anybody who was in the stock at the time that the Alkaid 2 results were first disclosed to the market on the 31st of December 2022, that was a very difficult RNS to read. And I think if we look back at that RNS, there was a lot of information in that RNS that the market was unaware about the fact that NGLs could be a component of the flow. The market had certain expectations about what the flow rates were going to be, and those flow rates were not met. And I think as we go into Megrez, again, going back to Roberto's point, I think that there are a lot of investors out there who are looking for a headline flow rate number. And that is a misapprehension. This is an appraisal well. It is not a production test well. It's an appraisal well with basically two different components. The first component is the appraisal of the three intersected zones. And on the basis of that appraisal, a decision will be made as to which of those zones will be flow tested. And I think it's very, very important that that clear pathway is understood by the market, and also that the company is very, very proactive in terms of the timing of its RNSs around each stage of that process. That would be my sort of learning from having lived through the Alkaid-2 test results, which I know a number of us have, and a number of us suffered greatly on that very day.
Well, I think, again, if you also go back to Talitha, where they tested from the Kapark all the way towards the shelf margin delta. So the rule of thumb is you test from bottoms up, again, because you basically want to then either squeeze those off or put some packer retainer in the wellbore to basically stop the flow from the deeper stuff so you can test the shallower stuff. So it goes back to if we have top sets 1, 3, and 9, and nothing else shows up, you start with the lowest sand and work your way back up. You try to open up all 3 at one time, probably not. So again, or do you find out, well, number 1 looks like the best thing in the world, I'm just going to go for that, and I'll just know that those other 2 are down there below, waiting to be tested some other day. So a lot of food for thought.
Why would we not test all 3 sections?
You could, again, the positive thing about this gravel pad is you've got full season access. And again, if you want to do stuff in the summer, you don't have all the snow and the minus 40, minus 50 degrees to deal with. So you could certainly take your time. Again, it's just a question of money, but they have all the time in the world to actually test this properly. And the only limiting factor usually is how long can you flare it before the state comes back and says, well, that's too long.
And funds, right? So we oversized on the placing recently, so that gave us the flexibility to potentially do a long-term test. But I guess it's not a bottomless pit of cash to really use this time around.
Yeah, and typically they'll do a well test, sort of exploration well test. A few days they'll bring out some temporary equipment, nitrogen gas tanks to basically try to help lift it if needed. And from that, then they'll bring in any type of facility equipment they want for a longer test, which they've got that stuff staged over at the Alkaid number 2 pad. So again, they could do a longer term test. But again, I think if the rock quality is the way it is, you'll know pretty quickly whether this thing has some running room to be a big field.
Right, and we're expecting the technical update in December, but they'll probably do the core analysis and make a decision on what the completion and testing strategy is going to be sometime in the new year, I guess.
Yeah, and core testing can, depending on what you're doing, some things can be done pretty quickly, but a lot of that stuff takes a while, maybe months sometimes, to do the proper testing. And what they do with a 4-inch core is quite often they drill what they would look like sidewall cores, about 1.5-inch diameter by maybe 2.5-inch length, and they'll cut it into the core, sometimes perpendicular to the core, sometimes try to go top down to a piece of the core, and they get different permeability measurements, horizontal permeability versus, say, vertical permeability. Now, the well is being drilled at a 45-degree angle, so depending on the dip of the sand, it's a little different than drilling a vertical exploration well.
So I guess it's going to be a question of if they get to target depth and they find what they're looking for, that's going to be really positive news, but a little bit of patience after that really to determine the best path from there.
Yeah, and again, LWD and E-line logs, which they run when they TD the well, those are really going to tell you a lot about what you have right away. But they'll know pretty quickly with the gas mud shows and the logs they have, what they have pretty quickly.
Right. And obviously want to send shareholders off to Christmas feeling good about what we found.
A long-suffering Pantheon shareholder.
But we got the gas line as well, Flight.
Yeah, I was just going to say. So we're. It's tense times, isn't it? But it's exciting times. This is why we're all here. Potentially, this is the best drill worldwide this year.
Just hoping that a Megrez Christmas is better than an Alkaid New Year, basically.
Yeah, so Sporazine, you've been in touch with the AGDC on and off for the last few weeks. Sporazine, yeah, give us an overview.
I will say that the AGDC have been, fairly good with communication and sort of open with information as they can share it. I wouldn't obviously encourage everybody listening here to suddenly start getting in touch with them, but I think from my point of view, it's been great to be able to have that open communication channel as I continue to sort of qualify my position around Pantheon. But I think I would say from what I've seen a big shift in terms of US energy policy since Trump was elected. I mean, that's obviously no surprise. He was advertising that as part of his campaign, but we've seen videos. I think Dunleavy's done a couple of interviews. The governor, Mike Dunleavy's done a couple of interviews pretty quickly after the election where he was, signaling increased momentum around the gas line project. And Trump himself, of course, I think everybody will have seen the short video that he did where he calls out the gas line. And, I was personally blown away by that video. And I think it really does look like it's kind of full steam ahead for the gas line project. And we saw the Wood Mackenzie report come out on November the 12th. And I think that really articulates the economic value of the project to Alaska. And I think that one of the many things that stood out for me in that report was actually how cheap the gas would be on the full LNG project. And, I know the phase one pipeline is really going to solve an immediate problem for Alaskans in terms of the depletion of resources from the Cook Inlet. But of course, if you look at the cost differential to Alaskans of gas supplied by phase one, which I think is around about $10 per MCF versus something like $2. And if you think then in the context of the US energy policy shift, it seems pretty unlikely to me that if the phase one went ahead, that phase two wouldn't really come along behind it. And I think it's kind of incredible, really, that we're at the center of that massive infrastructure project, as you've said a number of times here, Flight. I'm sure that you'll be dropping links into those recorded presentations to the House Resources Committee, which was the full Wood Mackenzie report. We also had the Fairbanks Energy Task Force on the same day. Frank Richards and his team, including the guys from Wood Mackenzie, did a similar presentation to the House Resource Committee on the same day. And it was tremendous to see them give that presentation and the insights that they were giving. What we have got sort of in the short term, as I mentioned before, is the AGDC board meeting is going to be, I think, in the second week of December. Looking back on the letter that Frank Richards wrote to the legislature in April when they were seeking funding for the next 12 months, he made a pretty cast iron commitment around securing the funding to take the feed forward for the phase one project. Given how long that this project has been mooted, I'm pretty sure the naysayers will be shouting from the rooftops if they don't make material progress. And it seems like an ideal time to be announcing some progress at that AGDC board meeting in the second week of December. And of course, as I said before, it would be a dream scenario for us to really figure that we've found what we're looking for in the Megrez one well at the same time. And I will sort of just make a point that for those that listened to the last board meeting, one of the participants did raise a risk around us being able to supply the gas into the pipeline. So I think for us to basically find what we're looking for at Megrez would just really de-risk our participation in the phase one pipeline significantly as well, which I think is what we're really all looking for here. So I think just like a lot to really look forward to from a pipeline point of view, and would be great to see the project move forward and move into feed next year. And I think Alaska Geo-Phys, I guess from a local Alaskans point of view, it'd be interesting to hear how the project is really perceived up there by everybody.
I think there's some smart people that know what's going on. There's a lot of people that just are pretty clueless about, their energy needs, at least how it affects their local heating gas and power generation. I've followed it closer than probably most. But we have Chugach Electric, which provides our electricity. They're largely dependent on natural gas. Then NSTAR is our gas company that supplies gas for heating and some of the industry that need it. We have military bases both in the Fairbanks area and the Anchorage area. And again, they want to have, for strategic reasons, a good supply of fuel to heat and power their facilities. So again, it's pretty pressing. Right now, we're looking at about $8 per million BTU for our sort of natural gas prices in Anchorage. And we get that largely from the Cook Inlet, which has had a long history recently of not finding more gas to replace what's being produced. But then we also have the various studies, the WoodMac and other people that have looked at, what's the choice? We can't really rely on Cook Inlet anymore. So it's either going to be importing gas from Mexico or Canada or somewhere else in Asia Pacific area. But that's going to be very expensive, $13 per million BTU or MCF-ish. Or do we actually just bring it from the North Slope? And again, I think Wood Mackenzie has done a good job of looking at the various alternatives from phase one being sort of 10 to 11 sort of dollars per million cubic feet of gas, MCF of gas. to, if you had all that gas brought in from Conoco and Hillcorp at Prudhoe and Point Thompson, you could drive down local residential gas prices to basically $2 or so per MCF. And that's, way cheaper than what we're paying right now. Of course, that's, 10 years or so out for some of these things. But it's got to be great. And again, politicians, they just need to get onto this and realize, you really want to be importing gas into a state that has got so much gas to do what we could do with it? Or do you want to actually spend a lot of money, $10 billion, $11 billion to get phase one done, with a lot of it federal guaranteed loans, and then eventually get, the bigger prize, which is perhaps Prudhoe and Point Thompson gas, to basically do more exporting with. So it'll happen, I think. It's just a question of, political will to make it happen. And I also wanted to say, again, Alaska Permanent Fund has billions and billions of dollars in it. Largely, they're investing in, sort of the typical ways you make a good return of money. But some of the folks like Dunleavy and stuff, I think they want to make that a little bit more free, where they could use some of that money to do some of this investing in Alaska's infrastructure, which includes the gas line.
I mean, it's a vote winner, isn't it? And if you look at the Trump narrative in terms of driving economic benefit, I mean, you just look at the report, it just articulates the Trump narrative so clearly, in my opinion. I think, one of the things that I found, and there's a memo that came out from Dunleavy to the legislature that was attached to the Woodmac report. And one of the things that really stuck out for me when I went through his memo to the legislature was he talks about moving the project into industry, making an industry-led project. I mean, at the moment, it's a state-led project where you've got the AGDC, which is effectively a state organization that's funded by the state. And they've had an aspiration to move this out to the private sector for quite some time, but have never really been able to achieve that. And I feel as though, again, now is the time for them to really make that move where they move the project out to the private sector. There's clarity around US energy policy. Clearly the buyers in Asia, and we saw Frank Richards and Dan Sullivan out recently meeting some Japanese and Korean potential stakeholders in the project. So to me, I think the stars are really aligning on this one. And I think in addition to FEED getting approved and the backstop agreement being signed and somehow that issue being sorted out, I'm also looking for this to move out to the private sector. I think that would be a massive validation of the project, and would be, again, just further de-risking. I appreciate that this is going to take some time for the pipeline to get built, but when you see those sorts of foundations being put into place, it really makes a difference.
Yeah, I believe the Canadian pipeline construction company, Enbridge, I think that's the name. They want to do some of the feed work. They want to do the costing. They wanted the backstop, basically before they put their $50 million in. So again, I think they're all on board, ready to make that stuff happen as soon as they get the positive signals.
Right, and I mean, you've got to think that there are other parties showing interest here, and obviously, I'm a shareholder in Pantheon. I'm bought into the story, but I would imagine that the Trump victory and the communication that's been coming out from the Trump administration and the Trump himself about shifting energy policy, you've got to hope that the kind of phones off ringing off the hook there for people expressing an interest in becoming effectively equity. I mean, if you go back and look at some of the board materials from AGDC that are all posted online, they've made provision in their budget to negotiate for legal services to negotiate equity agreements in 8-Star Alaska, which is effectively the holding company for the assets in the project. So you've got to think that they're pretty close to doing something there. And I do take heart in Dunleavy's comments where he specifically mentioned it in his memo.
For me, I was just dwelling on the question of why wouldn't the state want to become an equity partner in the project? And I know historically the question's been it should be put out to the private sector. If the economics work and it's going to make, then surely industry will step up, right? But given that the state's permanent fund pays for the state's financial yearly plan, what's on offer here is, I think, a 25% stake in this infrastructure project that is funded via equity and debt. So the state, in a 75%, 25% split. So the state effectively has the chance to put down 25% of, let's say it's a $10 billion $5 ticket price, right? And effectively they could fund their overall 25% equity with around about $670 million cash down, and then debt for the rest of the 75%. That doesn't seem like a vast quantity of outlay out of the permanent fund to basically secure economic prosperity for generations. I can't get my mind around why they wouldn't want to move forward. The key issue has been the price of the feedstock gas. And historically, the feedstock gas has been high content CO2. So you've got large capital spend just to get pipeline quality gas down the pipeline before you can even think about infrastructure costs on a liquefaction plant to export LNG. But what we've found is this phased approach with Pantheon's low CO2 gas now gives them a feedstock gas input price for this phase one approach of $1. I think it's a watershed moment for the state, and I think that the legislative should be having multiple discussions amongst themselves about grasping hold of the opportunity that's basically landed in their lap. Pantheon drilled some wells. They found a shed load of gas. It's pipeline quality. It's ready to go. And Pantheon's quite prepared to sell it to them for peanuts, frankly, because it saves Pantheon the cost of huge re-injection OPEX costs for their own development projects. So if not now, then when? And so I keep coming back to the question of why wouldn't they invest something of the permanent fund to move the project forward, even if all the other economic industry ducks aren't quite aligned with, say, Asian off-takers stepping up to the plate to sort of move the whole project forward now. I still think there's a situation where the state can grasp hold of this unique point in history and move forward. So irrespective of any political statements from the president-elect, irrespectively of Dunleavy wanting to claim his legacy, I just think whoever's looking at this in the cold light of day, and the Wood Mac report, I would encourage people to go back to it and really pore over those numbers. The options on the table are for the state to move forward with this infrastructure project, resolve supply issues of South Central and Cook Inlet gas that's reducing year on year. Not import, can you believe that? Not import gas as a solution. And then open up economic benefits to the state for decades and decades and decades. I just can't, if not now, then when?
Great point, Flight. I agree.
I mean, I think there are potentially some regulatory sort of blockers on them investing in projects of this nature. I think Geophys, you mentioned them before, but I mean, it certainly is, not necessarily set in stone. I guess the other area to potentially that would be interesting would be federal support. So, I mean, you've got the Inflation Reduction Act, you've got the Loan Programs Office that Jigar Shah is running there, and they're still giving out heaps of money for clean energy projects, and I think this potentially might benefit from that avenue as well. But I agree. I don't think the issue with the permanent fund should be insurmountable.
If you look at the royalty you're going to get from selling gas, that's positive. But for the loan and the equity, you basically get a 10% pretty much guaranteed rate of return on the tariff, paying back the people that invest in the pipeline. Compare 10% rate of return with whatever the average permanent fund or other Alaska savings accounts are. And it's probably sort of in the ballpark.
Yeah. Can I ask a question? Sparzin, do you know this? I think the governor has his own budgetary amount that he can allocate towards kind of his projects, if you like. Is it outside the realms of him assigning the 50 million backstop feed money out of his own budget?
I'm not sure about that. I mean, I guess what's going on behind the scenes now, to my mind, is the governor sitting down with the legislature and just figuring out how they're going to make this work in terms of moving the the project to feed and funding the 50 million backstop. From my point of view, as I said before, it would be great if this was done as part of an industry solution, if they've got industry players waiting to take equity in 8-Star Alaska. I like the hint that was dropped in his memo to do that. It's a long-standing policy. So I think we're just going to have to wait and see, right? I think the one thing I will say about my contacts with AGDC is, they've been very good at sharing information and providing clarification on things that are really in the public domain. But anything that you would class as confidential, it's a topic that never gets discussed, right? And so I would say, in terms of exactly how the feed is going to get funded, I'm pretty sure this is being worked on behind the scenes. I'd love to think that they're going to make an announcement in December, but we'll never know until it's made public.
Okay, well, thanks, guys, for the chat. There's two catalysts, the Megrez #1 well, and also any movement on the Alaska gas line. Just really exciting stuff. Finally, then, just thoughts on the current share price. Where are we at? Sporazine.
Flight, I think we were tracking really nicely into the Megrez result, and I think the company took some prudent action around the Heights convertible bond payment for December, which I absolutely support. I think it was definitely the right thing to do. It's taken a little bit of steam out of the share price, but perhaps like the Heights selling has stopped, so I'm expecting the share price to recover back into the target depth announcement. So looking forward to the next few weeks.
Yeah, brilliant. Unbelievable, Jeff.
Well, I agree with Sporazine. I would add a couple of things to his points about the height situation. If we were into December and we had, let's say, a neutral to negative Megrez RNS and the stock traded down at around the time that we were making settlement, then the 3-day VWAP or 5-day VWAP on which we would price those shares would be even lower. So I think that would have been an even more negative drag on the share price in December, which none of us would have wanted. So I think they've done a good job to prepay it when they did. And then I would add the fact that, we're at 24p, and that represents a 35% gain on where the 17 pence placement took place. And we were trading for a number of months, between 15 and 19 pence. And so there are a lot of traders out there that are still in profit. And I think that some of those traders are de-risking into Megrez, maybe some longer term holders who are de-risking a little bit into Megrez. And I think the share price is where I probably would have expected it to be. And of course, I think it's hugely undervalued.
Of course. Well, Alaska GeoFiz?
Yes, I think there's a lot of good information that's going to come out in the end of November, early December, and it's going to be an exciting time for us. As a shareholder, I want to see it go up, and I think, again, there's a lot of positive stuff that's going to happen. So, again, I'm cautiously optimistic.
Yeah, and Roberto?
Yeah, well, history tells me that I often get more excited than the share price does, but I'm kind of hoping for one more opportunity to get more excited than the share price, because so time will tell, but I think it's a big month coming up, undoubtedly.
Okay, thanks, guys. This has been the Flight Deck. It's #1 of the roundtable, and what we're going to do is just track the story. Pantheon is an explorer moving to developer, and we're just going to follow it as the story goes, whatever the outcome. Join us again. Thanks, guys. Bye. Cheers.
Thank you.
Cheers.
Thank you from all the crew here at the Flight Deck, and hope to see you soon over at Flight's investment server, sharing industry insights for the good of all.